Hello, good morning. This is Real Talk. I'm Jason Matthews, part of the Proactive Alliance team at Real Broker, and I'm here with Terry Gangaram, president of Drexel Mortgage Corporation. And he's here to discuss briefly about non-QM programs to help home buyers get alternative financing solutions to the home buying process. So Terry, take it away.
Great, Jason, thanks for having me here and thanks for tuning in. Now, what is non-QM loans? Basically, it's loans where we don't need tax returns, pay stubs. So it's not a full, basically non-QM really means loans are not full income check. Full income check means tax returns, pay stubs, we're checking length of time at work. Non-QM, those checks are not done. We don't ask about your salary. We don't ask where you work, and things like that. All we want to see is down payment. So you have to at least 20% down to put down. From there, we can use rent of the rental income of the property to qualify. If you're self-employed, we can use bank statements, basically using your deposits and using that as income to qualify. Or we can use, if you're again self-employed, something called a profit and loss statement, a one piece of paper that lists your gross income, expenses, and then your net income. That's what we use, your net, to qualify. That's what basically non-QM is. So none of those programs we're asking you for your tax returns or verifying length of employment at work. Non-QMs are great for people who are basically self-employed. Self-employed or investors, you're buying investment properties where your income may not, you're making the money, but you're not reporting it. That's another way of explaining non-QM. So I work with a lot of gig workers, a lot of contractors, realtors also, anyone who's self-employed, who basically don't really show everything they make. And now they want to buy a house. Non-QMs open up a whole new world for you to become a homeowner. And you can buy multiple properties too, not only a single property, but you can start a real estate empire with these type of loans, and not rely on your salary. Sometimes with a salary, borrowers are limited. They have to go ask for co-signers and such. Non-QM, you don't need any co-signer because we're not using traditional income source. We're not asking the tax returns. We're not asking pay stubs also.
Now, how about foreign nationals?
So foreign national is, again, another non-QM. It's a fantastic program for people who have been in the country and never decide to become citizens. Mm-hmm. But they work their ass off. They have good income, good savings.
A lot of New York.
and a lot here in New York.
Yeah.
I have a lot of family members in the same way here too. Been here for years and decades, and never went to get naturalized. Right? So non-QM is the non-QM non-resident or loan, or foreign national loan is called. Basically, you put 25% down payment. We don't ask where you're about income again. We don't even check credit. So credit is not even asked at all. All we want to see is a passport from the country the individual came from, and that's at 25% down payment. Now they should have at least a year's mortgage payment after the closing, and that's about it. So very loose loan program in a sense. Loose, and what I mean by that is we're not checking credit, not checking salary. All you need is your money for the down payment. You must have 12 months mortgage payment in your bank account after the closing. But other than that, it's a fantastic program for people who probably you came to the country yesterday, matter of fact, or you're here 20 years ago, but you want to become a homeowner, never establish credit. We don't need, you don't have to have an ITIN number. There's a lot of things you don't need. You don't even need to have a visa to be in this country to get qualified for the loan. Basically, the two main thing is, I'll repeat again, is the money to buy, the 25% down payment, and a passport. A valid passport cannot be expired.
Wow. And I know you touched on investors and starting an investment empire. One of the loans that I typically was interested in for investors was the
The SCR loans. So,
Yeah.
what does it mean? Debt service coverage ratio. DSCR. That's what it is. It was used primarily for the longest time in the commercial world. If you're looking to buy commercial properties, now it's crossed over into residential. And again, it's basically very simple. To get qualified, one question is asked by underwriting: can the rent of that property cover the mortgage payment, the full mortgage payment, which means principal and interest, property tax, and insurance? Can the rent cover those things? You know, if the mortgage payment is $2,000, the rent must be at least $2,000. But it's not really a hard and fast rule. There is an exception, if I may add. If the mortgage payment is $2,000, but the rent is only $1,750, I can still do that loan.
Wow.
So basically, what am I saying is, even if it doesn't, in essence, I'm telling you, the viewers out there, if it doesn't even cash flow to a certain point, we can get you qualified for that property. Your viewers, all they have to do is give Jason a call or give me a call. I will explain further, but Jason has a bunch of properties that he can show you guys that fall into these programs to you. But the main thing is, what Jason's looking for is you, the viewer, who want to become a homeowner, who want to create wealth, who want to have the property work for them. We cannot, getting rich in America is not simply working 9 to 5. It's not going to happen. You need something else. Not another job, always, but what you do need is something that's keeping up with inflation. Property, real estate.
True. Typically, the turnaround times for these loans to close.
Like any other mortgage loans, they'll take at least 4 to 5 weeks.
Okay.
So which is typical. You know, it doesn't take as long or as less at all.
Okay.
All these loan programs do require an appraisal. So, you know, we will order an appraisal. The appraisal must come in for the purchase price. That's another basic guideline we all need.
Awesome. Okay. So there is these are just little taste of what Terry could actually do. There's still some programs and there's still more details on these programs. If any of you have any interest in these programs, want to learn more, you could definitely contact me and Terry. Definitely Terry will be able to tell you. I think these programs are amazing because I've been in the mortgage world myself and I mainly did FHA VA loans, and these programs here, it really is going to help a lot of people that couldn't get into a home become homeowners. I definitely like programs as well. Some of these programs I like is the ones that help gig workers. There's a lot of gig workers now that do Uber Eats, that do DoorDash, you know, those type of self-employed type of income. These people that make a lot of good money doing these things can qualify for a mortgage as well to purchase their house.
That's correct. And again, you know, feel free to call either of us, Jason or I. Don't cancel yourself out. I've seen throughout my 30 years doing mortgages, helping people become homeowners and creating wealth for themselves. Many times they'll come into my office and first thing they'll say, well, I think I'm not qualified. My credit is bad. My uncle said I'm not qualified. My aunt said I can't get a mortgage. Don't listen to people who are telling you no. If you want the mortgage advice, please give me a call and we'll put you in the right path, get you pre-approved, and then Jason will then start showing you properties. You want to, again, to create wealth takes action on your part. We don't have your number, you have our number, so please reach out.
Okay, well, thank you so much for tuning in. I'm here again, Jason Matthews, part of Practice Team at Real, and this is Terry Gangaram. Thank you so much for being with us and sharing this all great information.
Great, thanks.
All right.